Good day, everyone. Happy Friday the 13th. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Friday, March 13th, 2026. Ron Quaranta here with my amazing friends and co-hosts, David Brill and Joshua Klayman's dashboard. It is,
Hang on.
it is good to see you both. Thank you, everyone who's joining us on YouTube, LinkedIn Live, X, and whatever other platforms we happen to be on. Before we begin, our usual disclaimers, obviously, please keep in mind everything we're discussing is our own personal opinion, not necessarily the opinions of our firms, and really nothing discussed is accounting, investment, legal, or tax advice. Giving Josh the giggles at 12 o'clock on a Friday makes it all worthwhile. David, Josh, it's good to see you both.
Good to see you, Ron.
It's great to see you too. Am I frozen?
What? You're frozen, but we've got
Okay,
your voice, so
I'm turning my video off then, so you don't have to look at this smile until it unfreezes.
it is the raw production value of this, folks, that really hits the mark for everyone in the audience. David, Josh, let's dive in. David, I know the three of us text daily at this point, and I woke up this morning in my head thinking Friday the 13th, maybe we'll see a nice rebound. And I saw Bitcoin breaking 73,000. Even Shiba was up. Everyone was sort of feeling a bit better. Well, David, that didn't last. So the markets are moving down. I know there's a lot of geopolitical stuff we have to cover. I know there's a lot of macro stuff to cover. And Josh, we definitely need to talk about regs and what's going on in DC. But David, is this as weird a market as I keep saying it is?
You know, it's not as weird as you think it is, Ron. I think we're really range bound as Amber's getting riled up about.
Amber wants information, David.
You know, Amber saw that almost 300 million in liquidations happen on the short side, and she's getting a little riled up about it over here. I think we're really in a range. We're in like a range of 64 to 74, and now we're on the higher end of the range.
Yeah.
And, you know, according to some different reports, there might be some repositioning of positions in our space, but I don't think fundamentally things have changed. I think what is positive is in the last Iran conflict, you know, crypto and Bitcoin went down around 15%, and right now we're up, you know, maybe 5-6%.
Yeah.
And that's a positive. But I mean, and as reported in other places, there was such negative sentiment that it was time that, you know, somebody was buying in at these levels.
Yeah. David, you know, the other thing to bring up is I'm pleasantly surprised, despite the volatility of what I'll call the resilience, particularly of Bitcoin and Ethereum, given what's going on globally. Macro headwinds, we've got some geopolitical issues, obviously the war in Iran that we have to talk about. I would not have thought BTC maintained 70, given everything that's going on. What does that say about where BTC is in the economic landscape?
Well, look, I think it's interesting. Like when you look at the Middle East, you know, if you look at Iran's, you know, currency must be deflating on a or inflating on a daily basis. So maybe people have been moving their money into crypto, and you know, they could probably much easier use crypto or stable coins than their own currency right now. And maybe across the Middle East, some people have, you know, moved into crypto as a way to sort of, you know, prevent any kind of inflating of their own currency. So I'm not totally surprised. We have gone down quite a bit, Ron. So
yeah,
it does make sense that that people may be pivoting into this, but it is a good sign considering that oil is really high, and then usually risk assets would sell off in this scenario.
Yeah. Josh, I want to pull you into the conversation in between glamour shots that you keep posting from your phone, but I wanted your thoughts as well. Obviously, it's been a crazy market lately, Josh. I guess let me ask you this question. How much of that, in your opinion, is based on some of the what we're hearing out of Washington, D.C., particularly some of the regulatory updates, particularly, hopefully, some of the moving forward on legislative items, particularly Genius? We might have lost Josh.
I'll weigh in a little bit. I think that, you know, Genius is sort of in the April-May timeframe right now, because Tom Till has said that they're going to focus on the SAVE Act first. And so I don't think the price is really correlating to these different moves because I don't think we're going to see something till April. And it doesn't sound like to me that there's been a lot of movement
Yeah.
on the core issues. I mean, we've seen a lot of conversations back and forth. We've seen the White House weigh in on their view about the treatment of yield and stable coins, but I don't think there's been a lot of movement
Mhm.
um, on the core issues, or at least, I mean, I know personally, I know that there's a lot of conversations that are going on the Hill on this.
Yeah.
And I'll be in DC next week and have, fortunate to talk to some folks about this issue.
Mhm.
But, I think with what's going on both overseas and going on, with the SAVE Act being a priority,
Yeah.
I don't know that that's influencing price in a positive way.
Yeah. And look, I mean, candidly, we've mentioned this in many broadcasts. We mentioned this in our regular conversations. I get that crypto and Genius Act and all the things we talk about in DC are important given the ecosystem we operate in. Washington arguably has other stuff on the plate as well, and sometimes this stuff doesn't rise to the level of importance we would have hoped. David, you mentioned April-May timeframe. Let me ask you this. Earlier in the year, I remember you and I talking and thinking, and we spoke to, shout out to Adam Goldberg,
Yeah.
and so many of our colleagues from the perspective of policy, where we thought, look, if we don't have a bill signed by January, February, it's not going to happen. Then it became February, March. Are we running out of time, David?
Yeah, we are running out of time. We're not running out of time substantively. We're
Yeah.
running out of time on the calendar basis.
Yeah, literally the political calendar.
Yes, and re-elections are starting, and there are just a lot of issues that are causing fault lines between the parties. So I think the closer we get to elections, the harder it is to get some bipartisan, uh, work on something and get something passed.
Yeah.
Adam said that before. Other people have said that before, but echoing that, I think it gets much more difficult as the calendar moves on.
And one of the things I think about, David, just to kind of weigh in on that as well, it gets more difficult as the calendar moves forward, but also there really still is this banks versus broadly crypto argument that continues to happen in the space. And I think for a long time, you and I have been pushing the thesis that it is not a zero-sum game where, we could anticipate a future where obviously banks are integral to the economy, but there is a place for stablecoins. There is a place for some of the things in the digital asset space that we see evolving with particularly powerful use cases. Is that still the core problem, David, that banks are pushing against this? Are they looking just for the walled gardens of what banks have created, from a stablecoin perspective, for example? That's a loaded question.
Yeah, it is a loaded question, especially on a Friday afternoon. But look, incumbents want to protect their positions, and I think we have to look at it in terms of that. Um, I think there's just a lot of utility that we can get out of stable coins, and I do think that offering some kind of yield is beneficial to the public.
Mm-hmm.
I think the parties have to find a way to compromise.
Yeah.
So look, there could be a strategy of sort of delaying this along until some of the traditional companies have a chance to sort of fully fill in their positions, and then so they can compete head on
Mm-hmm.
as well. But unfortunately, this issue has been polarizing, and it's something that feels a little bit intractable. But maybe with the executive branch, we can find a resolution.
Yeah. David, I don't think we're not getting Josh back yet. Apparently the Starlink and the Bentley isn't online. But, speak of the devil. Speaking of Josh Klayman somewhere in a Bentley, Josh, are you with us?
I am. Apparently, right as you were posing the question to me, I went through an area with 0 bars. I count them 0. So I am back. Hopefully not a devil, but I'm back.
You're not a devil, Josh. We will make sure the Starlink gets delivered to you soon. Josh, let me pull you into the conversation. David and I have been talking about kind of the landscape around how legislation moves forward. I think the other side of that that I think is very important, and you talk a lot about this in our legal working group, the regulatory progress that's happening in the space. When I think about SEC, when I think about CFTC, when I think about the joint task force work that they're doing, Josh, is that a reason for optimism for the crypto markets?
I think so.
If
I
we
mean,
lost Josh again,
I have was so excited. No, I'm here. I'm here. I'm
Josh,
here.
yeah, you're cutting out a lot, my
I was at
friend.
the FI. Okay, I will try and come back in when there is a stable signal. My apologies.
Okay, no worries, Josh.
There's a lot
David,
of dead spots in Jersey,
a
Ron.
lot of when you live, I live in the middle of a forest, so I'm lucky I got FiOS. David, let me pose that question to you. And again, you are part of the legal working group. You chair our crypto assets working group. We have this conversation regularly. I am impressed by the coordinated work of the regulators in DC to at least create as much structure as they possibly can in the absence of legislation that creates market structure. I had a conversation with a colleague earlier this week, and his perspective was they're overdoing it. Like there's too much leniency coming out of SEC and CFTC. And I hadn't thought about it that way, David. It might be a more provocative question than it should be. What's your perspective on that?
Well, they were saying too much leniency about settling enforcement cases.
Correct.
Well, look, I think you really have to look at them individually, but I think the premise that a lot of these cases were based on classification cases, and if there's going to be a new classification regime, and one could argue that the previous one where people were being enforced against was vague and is unclear and really not nuanced the way that the law has transformed, then I don't necessarily agree with that. If they feel like there's more leniency on sort of the insider trading or kind of the fraud enforcement actions, that's another story.
Yeah.
But I think the classification ones, they need to be resolved because classification's in flux, and the judiciary definitely has a different view than the prior SEC chair. And I think accordingly, those cases that they brought, aren't as effective now.
Yeah. David, we're planning our trip sometime later in early May to DC. We usually do it in March, but it's been a busy year so far. What do you anticipate from regulators going forward on some of this? And again, when we talk about the task force, when we talk about interagency coordination, I haven't seen a whole bunch of detail, but why is that sort of coordination important for the crypto space?
Well, look, I think right now we kind of have this interesting reversal where we may have great coordination on the regulatory side and then less coordination on the legislative side.
Yeah.
Which is sort of very different than where we've been for a number of years. I just think it's important because you don't want two agencies that regulate the space coming up with different regulations that are, difficult to follow. If you're one entity and you get rules from the SEC and rules from the CFTC, and they overlap or it's difficult to implement those, then it's problematic. So to see them work together, it's great. And I think it's consistent with the idea that, a government that serves the people should coalesce around that idea and collaborate. So I think this is a positive thing.
Yeah. We've got a lot of voice of industry feedback that we'll bring to the conversation in May when we go to visit with the regulators. David, let me pivot if I could, and I'd love you and I to have the conversation. I've been saying weird economy for a while, and I know that's probably overstated. But when I look at market dynamics, and we haven't talked about data from the week, but I think it was GDP was up 0.7%. I think globally, widely rather, economists anticipated double that, 1.4%. Inflation held steady. When you look at the underlying trends around rates, when you look at the underlying economic activity, there's really two things that come to mind for me. One is geopolitical turmoil, which we spoke about, price of oil, et cetera. But it really brings me back to the Fed. And at the beginning of the year, there was a lot of conversation around, we're looking at 4 interest rate cuts throughout the year. And every week it seems that the data comes out and supports that and then contradicts it the next week. Hence, weird economy. When do we become risk on again, David?
Well, look, these geopolitical situations are unique.
Yeah.
And they uniquely affect our economy. I think there's two things that are at play. One is, what is the extent of AI related white collar job losses?
Yeah.
And where those jobs are, those people who are losing these jobs, are they going to be able to go back into another part of the economy, or are they going to have to be retrained? So I think we're seeing more of those, and significant ones. I think Oracle was like 15,000.
Yeah.
Amazon was 15,000, or rounding. So I think you have that, and then you have these the rising prices of oil, which personally I don't think will last very long. I think this is sort of, when you look at it, and I'm a history major, I'm not a geopolitics expert, but when you look at what's gone on between what Israel and the US has done to degrade Iran, this is the last card they have to play.
Yeah.
And I don't think that they have the ability to sustain this for a very long time. So yes, it's going to hurt. We've gone into some strategic reserves. Oil prices are going to be higher, but my sense is that in a month to 6 weeks, we'll see prices back to a more normalized level, and it maybe even be quicker than that.
Yeah. David, let me throw one more wrinkle in there to our analysis. And again,
Okay.
you text about this on a regular basis. Two words for you: private markets. And the challenge there that I see, and we could talk about Blue Owl, and I don't want to go down the road. It's really not part of the remit that we're doing here. How the challenges of private credit in that market are showing fractures, where they're stopping withdrawals. My argument is that private markets are a very different thing. How it's portrayed in media makes it look like we're heading for a new great financial crisis like 2008. Am I overreading what I see in the news?
I think so. I mean, I do think it's a problem, and it's not good to see when the banks are limiting withdrawals. And I do think there will be, meaningful losses,
Yeah.
but nowhere on the scale that we had in 2007, 2008.
Yeah.
These loans are made to operating businesses, and there may be haircuts.
Right.
But a lot of these loans have covenants, and they're things that companies may have to give up, whether it be ownership interests or something else, depending on what's written into these loans. So I do think it's a problem, but I also think it's more of a institutional problem and not a retail problem. Like, I don't think retail hasn't been able to invest in these products, and so I don't think they're going to feel it. It's just going to be, it's going to be, if you look at the P&L, there's going to be really high trading gains that the banks have this quarter, and there are going to be some losses on these loans. So I think it will play out in that way.
So here's an interesting aspect to that, though, because we've seen it in hearings at the SEC, we've seen it in other forums, the retailization of private markets. I guess the question becomes, while we're starting to talk about that, private markets are starting to crack. What does that say about financial access, which you and I've really advocated for a long time?
Boy, it makes it a little more complicated, but it doesn't change my view that individuals should have access to products and shouldn't be walled off unless they make an income threshold.
Right.
But I mean, again, not all products are meant for retail, and so we have to find that balance. At the end of the day, people need to take personal responsibility for what they're investing in.
Yes.
And if something is opaque, if something is really complicated and you don't understand what it is, then if you don't have discretionary income, it's probably not what you should be investing in.
The Warren Buffett, if I don't understand it, I don't invest in it thesis.
Yeah. And I mean, look, nobody's forcing anybody to push the buy button.
Fair.
So I mean, you can hear about it, but if you're not really well versed in it, you really have to look in the mirror and be like, is this what I should be investing in?
Yeah, really good point, David. For everyone in the audience, thank you so much for watching us. We'll try to find out where Josh's Bentley is as soon as we can. And if you've got questions for David or I, please put them in the chat, LinkedIn, X, YouTube, try to answer them. And I did it again. I mentioned her name, and apparently Josh showed up again. Josh, we mentioned your name and you come back online. It's like magic.
Well, I have had the car pull over, so hopefully it will remain steady and I'll be able to answer. Shall I go back to the thing that you asked me about before, or have we moved on from there?
We moved on to stuff that David is super smart about, but would love you to go back to that, and then we'll continue the dialogue, my friend.
Sounds perfect. And my apologies for this. The perils of live action broadcasts.
It's
So
raw production value.
well, one thing I was super excited about earlier this week, I was in Boca Raton at the FIA conference. And so I had the pleasure of being in the audience when SEC Chair Paul Atkins gave his talk about substituted compliance, and where he previewed the MOU that was coming out, that did come out this week. Um, while this has much broader implications than just our crypto space, I think this
Mhm.
idea and recognition that not only should we be thinking about, in what ways, I know our regulators have talked about, potentially speaking with other jurisdictions, perhaps the UK and others, to work towards finding, if not harmonization of laws, finding ways to have recognition of what may be fulfilled in other jurisdictions. And I think we've talked about this with the states, right? And to what extent
Yep.
should one state's laws be, recognized in another if they have certain licensing, which of course is the subject of much debate. I think here, this recognition and this working together of the CFTC chair and the SEC chair, both of whom, by the way, gave talks at the FIA conference.
Yeah.
Um, and express statement that yes, things like clarity is super important, and so is not having to jump through a bunch of hoops that are essentially the same hoops solving for essentially the same things at their core,
Yeah.
right? And trying to find ways to have, again, substituted compliance. I realize again that this is much broader than
Yeah.
just for the crypto space, but I think it's a move towards, just another step in a number of steps for why the US is poised to become a more attractive and is becoming a more attractive jurisdiction for clients in our space.
Josh, for the audience, MOU, Memorandum of Understanding between the SEC and CFTC. My
Yes.
ignorance, Josh, and I'm not sure if we know off the top of our head, but has there ever been an MOU between the two regulatory agencies like that before?
I believe that there have been. In fact, I believe, although I could be wrong, I believe that there have actually been MOUs between the SEC and the CFTC. I may not be right about that, but I do recall. So after Paul Atkins gave his speech, there was kind of a talk, an interview, kind of a fireside chat between one of the key folks at the FIA and Chair Atkins. And I
Yeah.
think one of the things that was mentioned, although I'm not 100% clear whether I heard this in that talk or whether I heard it somewhere else, but is that, why is this MOU different from other
Mhm.
MOUs that the SEC may have? And I just think this, yes, there may have been MOUs um, and every other letter of the alphabet, uh, between these agencies or among agencies. But what I really think here, one thing that was emphasized was that, look, Chair Selig at the CFTC, Mike, right? He was the
Yep.
chief counsel to the crypto task force. These people
Yep.
are aligned. Like there's an understanding, there is an alignment of perspectives. And I think, we don't just look at this MOU in a vacuum, but rather I
Yep.
think it's better to look at it in sort of the flow of all these other things that are happening. And it
Mhm.
is trying to break down these these silos and these barriers and this interagency competition. And I'm very excited about it. And by the way, like the energy in the room and Chair Atkins's energy when he was talking about this, I mean, it was really infectious. And I think yeah, I'm excited about it.
Josh, really well put. Thank you so much. FIA is always a great event. David, weigh in on this as well, because Josh made a really important point. Deeply involved and coordinated and aligned, I think was the word, Josh, you used. And one of the things we've seen from the agencies in the past, call it year and change, has been deeply knowledgeable, David. We've met with the task force, we've met in DC, and I want to add a couple of things to that as well, David. We talk about SEC, we talk about CFTC. Full disclosure, We've responded to FDIC notice of proposed rulemaking. OCC has put forward a really comprehensive notice of proposed rulemaking that directly impacts the crypto industry. David, is all of this good news? And Josh, would love you to weigh in after that as well.
Look, I mean, this is what progress is. You have, rules and comments, proposed rules and comment periods, and we're getting that now. I think this is very positive. I think that, under the leadership of the executive branch, our legislature has taken a different view on where crypto sits in the financial ecosystem, and this is a byproduct of that. So I think it's positive. And look, these things do take time, and they're meant to take time so that you have a proposed rule and you have ample time for comment. And then those comments can be incorporated into revised drafts of these rules. So this is exactly how the regulatory or sort of, regulatory sausage making is meant to go. So yes, I do think it's positive.
David, one last for you, and then Josh, would love you to give your opinion on that as well. You've often said in the past, David, we're behind 4 years. Are we making up the gap in the United States?
Slowly. I mean slowly, but we are. I mean, there are things that we are doing, but I still think that we are behind. And I think Josh can speak to that. As her practice, sees and works in other jurisdictions. I think that we are making progress, but we're also making progress in the way we make progress in the US is because we have so many different agencies that govern financial products. So I do think we're making progress, and I'm grateful for that.
Yep. Josh, before I ask you to weigh in, just shout out to David Wysocki and his comment. Similar to MOU was the Shad Johnson Accord eons ago. David pulling out the Wayback Machine, dealt with jurisdiction over narrow SEC and broad-based indices on securities. David, thank you for the reference point. Really appreciate it. Josh, without naming names, is this kind of helping client strategy going forward in the United States?
I think absolutely it is because it provides, instead of an unwelcoming sort of forest and kind of brush that you have to navigate and then, a rough terrain. The idea appears to be that, we actually want there to be a glide path. We're not trying to dispense with requirements for being good, right? For being competent, for having the right stuff, right? To protect folks in our country and also, have the right standards, but just trying to cut through some of the underbrush, right? Trying to clear a path. What I would say is I'm excited about it. I think many clients are excited about it. What I do wonder, and this isn't aimed at any one industry or any one type of entity or party who has licensing from any one regulator. I do think to the extent that things become easier and to the extent that people who already, and by people I mean obviously entities as well, who may already have complied with really onerous or expensive licensing and registration requirements, right? Where they invested a lot of time and have some degree of a regulatory moat, or if not a moat, they've just made an incredible investment. I do think that there are possibilities where we may see back. We've already seen it in different contexts from certain players about certain things that we might consider in other contexts steps forward.
Yeah.
But I do think we have to remember as we talk about each week this idea that without the kind of market structure blessing of our agency's statutory authority to be dealing in this area, query whether any incumbents, again, from various industries, may end up, bringing suit or otherwise trying to, keep their advantage.
Yep. Josh, I gotta apologize. Audio a little bit spotty there, but we got it. Really do appreciate it. David, let's wrap that up. And we've only got a couple of minutes. But I guess one of my side questions to you, David, would be, is the feared phrase "come in and register" no longer fearful to global crypto participants when they think about the United States?
Look, I think we've seen some no action relief granted in a few cases.
Yeah.
I think that there's other meaningful no action relief that's coming.
Yep.
Especially in the tokenized securities and tokenized asset space. So no, I don't think I think that regime of the last 4 years with the Commissioner Gensler has changed.
Yeah.
And look, I think there's substantive conversations had with people who can really answer these questions and understand the dimensions of it.
Hmm.
So yes, I think it's changed, dramatically. I mean, I think also like we can't lose track that we did have a government shutdown. Um,
Right. Right.
I think people forget that. Like, I think it's easy to sort of forget it, like as we business as usual. But we did have a shutdown. It definitely slowed things down. But I do think important matters are being discussed. No action relief for tangential parts of our space are being discussed, and
Yep.
I do think we're continuing to see progress.
Yeah, we've barely scratched the surface on tokenization. We'll probably have to dedicate a whole episode to it, David. And just for you and Josh, I know that TSA just opened this morning. When you've got the Gulf streams, though, that's really not a problem for you, correct? Just to be clear.
Well, Josh just streams runs through. Unfortunately, we have a number of private airports in South Florida, Ron, so it's just very easy.
It's very easy to get on, David. I appreciate it. David, Josh, let me ask one last question. We're a little over time, and everyone's super busy. There's a lot going on. David, you and I and Josh, we all know that there's this ecosystem of investors and professionals that look at what I'll broadly call trademark listings. I'm going totally off script on you, David. You might have seen this. And someone pointed out that Wells Fargo filed a trademark for, I believe it's WFUSD. I think we all know where that's going, David and Josh, but I guess my question becomes, will everyone have their own stablecoin?
Look, I think there's a strong possibility that that's the case. The other possibility is that a symposium of banks, lean on one technology and one stable coin and adopt that one.
Yep.
But look, I think it's smart. I mean, I heard some funny jokes about different acronyms that could be used for that token.
Oh, we'll do that during happy hour.
Yeah, no, it's just funny. I was listening to another podcast and somebody made a funny joke that caught my attention. But ultimately, look, I think it's smart. I think it's smart to be positioned for this. And it's just another bullish sign that the banks are taking this seriously and want to be positioned for it.
Yep. Josh, is that sort of substantiating what you've often said in the past, which is we've all said builders keep building? Are the banks building, and is it not necessarily banks versus crypto?
So, with the caveat that I believe my audio may be bad, even though I have not moved, yes, builders keep building, and yes, the banks are building. And I don't think, though, at this point that it's necessary. It might sometimes seem like it's against crypto. I see such a convergence. And some of the projects that I'm working on and have recently come in, the companies that we think of as really crypto native and some of the biggest names in crypto are working hand in hand with the banks. Right? It's not an adversarial relationship. It's very much like, how do we get this done? And really, working as counterparties. So it's exciting.
Josh, really appreciate it. Let's wrap it up. David, last thing I'm going to ask you, take out the crystal ball, buddy. Let's assume geopolitical challenges resolve themselves before the end of the first half. Let's assume we get some stabilization on some of the economic data. Is it number go up in the second half of 2026, and or do we see 4 interest rate cuts this year?
Boy, I know we're starting March Madness next week, but you're getting a start on it. I will say that I do think number will go up, that I do think that the conflict in Iran will be resolved before the summer. I do think that because we're in midterms, that there'll be a strong desire to get the economy going again. But I'm not going to be super bullish on crypto right now, but I will say that the number will be higher than where we are now.
David,
more to come on that, though. More to come.
Not surprised. Thank you, David. Not surprisingly for the audience, I agree with you. Josh, we're going to give you the last word before you get on the jet.
I'm sorry. What word?
We're giving you the last word before we close.
Last word. I think everyone have a wonderful weekend. I think this again, is a super, super exciting time. I think whether number up long term, short term, again, not investment advice. I think we have a lot to be excited about this week, and hopefully, yeah, hopefully you guys have a wonderful weekend too.
Have a great weekend, Josh. Thank you so much, David. As always, my friend, it's good to see you both. Thank you, everyone who joined us. Shout out to David Wysocki for watching as well. If you've got additional questions for David or Josh or I, please email us info@wsba.co. Have a great weekend. We will be back next week. Bye-bye.
Take care.